Hello from the children of planet Earth. Hello from the children of planet Earth. Hello from the children of planet
What's up, everybody? Good morning. Looking like we get our day started here. Yesterday's sell-off? Oh, I made a couple videos about it yesterday. Let me get those up on the website. I'll get those up before the afternoon. I uploaded them yesterday. Yesterday's sell-off, not a big deal. It just was a cascade. Had you guys stopped trading at 2 p.m. once the 2 p.m. rule kicked off? That's exactly what we were talking about. Right at 2 p.m. we don't trade anymore. Right here, it's the end of the day. You don't play at those 0-day expirations on VIX expiration. You lost the bull zone. You hit a liquidity pocket. It's random, and you had head stretcher break. Then you had DD band break. I mean, it's waterfall. It's high volatility. You know, we switch over to a new VIX contract. It's all that stuff. No, nobody should get caught up in that. Do Christmas music again. All right. Oh, we hit that DD band. Day's already over anyways. Oh, yeah. Something how my one particular shortcut that I'm using, the DD bands aren't showing up. Let me see if they show up at 9:30. On my other, anywhere else up in the platform, they're there, but this one particular Windows shortcut is not Make sure I have the right link on there. We'll see. Oh, that's actually pretty interesting. That's an interesting thought. I see the cause of it, as Barb had stated. Could be. Alright. So we've already hit DD band, S&P and Nasdaq. Nasdaq's actually opening outside, so it's already day's pretty much already over for what we normally would do. That retracement's already taken place, so we'll just kind of see what we get. Earnings today, Nike. Oh, interesting. Okay. Let's see, the COT report still showing the same. This is like that in a couple weeks. Let's get our jobless claims up here. GDP, pretty heavy news today. Wait, missing initial. We got 3 minutes to market opens. Initial jobless claims came in underneath the forecast, which is good. And still the wave, fewer waves of layoffs this week. The continuing jobless claims are starting to flatten out, but it's still elevated. So it's just kind of like a hiring freeze. There's not a lot of people pushing on that. The GDP came in huge. Oh, wait, hold on. Hold on. 1129. Wait, forecast. How come? Oh, were these modified? These recently edited because the graph says 2.1 and 2.1, and this is 4.9 and 5.2. It's missing some data points. That's weird. 21, 21, 21, 21, 20. Previous. Actual. These must have been corrected. This is weird. Why are the previous and these not lined up? They should be lined up. For the previous 2.1? No, previous was... Unless it's a year over year or quarter. 2.1. Oh, it's the quarter. Okay. 2.0, that's the quarter. 2.6, that's the quarter. Oh, it's looking previous as a quarter ago. Oh, okay. Yeah, that makes sense. But still, though, that's where the lineup is. Okay, so 2.1 was last quarter. The quarter over quarter is 4.9. Ah, there we go. Data. Love it. Starting my breakfast early. Matt's probably just gonna hang out for a couple seconds with you awesome folks. Matt's got a plan for New Year's. Like a New Year's party to host or something, probably. Everybody's calling me and like, what's going on at New Year's? What are we doing? No clue. Start booking something. I was gonna go out of town somewhere. some of my friends are going to Tulum. Some of my friends are going to Miami, Vegas. They're going all over places. I'm like, why just stay in town? Okay, opening resilience nice and clean on this open. Well, that's because we were gapping up pretty heavily. Oh, look at this. Yeah, dude, terrible day, no trades. Look at this crumminess. The only things worth touching. Okay, so the day is over, you guys. This is pretty much it. You'll see how I look at it. Automatically, there's nothing really good. Nothing good at all. Let's see how this works. Pretty simple. All right. Where's mine? Wait. What is... Hold on. Open up. My drawing tool is... Let me close it and open up. Yeah, here. Positive resilience, hedge pressure resistance, right? So I'm looking for... Now again, these are bull setups. 72.5 break is a long chase with a small position if I do want to get one. Pretty easy to see this one. What is? Come on. Close. There we go. No, maybe lean bearish. No. I'm not leaning any direction. These are BSUs are highly bullish. They're still bullish, but I need the break to take. So I'm not taking anything bearish at all. So that is a play, and that's the end of the play. So if there is a break here, it can go somewhere, but DD bands are already like right here. Which I don't know. Again, I don't know. My shortcut is not showing up for some reason. Let me try disconnect and connect again. Give me a second. No clue. Let me rearrange my little layout here. Okay, so yeah, so in this particular setup, there's nothing we're taking. This is just already, day's already kind of dead. So you get the hedge pressure tap there. VIX is also in a bull zone. So any upward movement is going to hit that VIX bounce. So this is short-lived. So in general, like, I'm not going to short it, but any long break is going to start finding volatility. So it's not, there's no, in my opinion, there is none of that today. So the only way that we're going to get some upward momentum is if this hits bull zone and falls lower. So the volatility is likely to pick up any upside movement, right? So if it goes up and up and up, you're going to hit that VIX bounce area where it's that ticking time bomb, and it could still sell. Now, again, I'm not betting on the bear market. I'm just going to sit out on this one. DD bands already end the day. These are red lights, so the day's pretty much over. Upward momentum to hedge pressure. Any hedge break I might take, but that's going to make me not want to do it. So no trades today. See how cool it is just to wake up and say, nope, I fold. Let me go watch Christmas movies all day or something. All right. Super easy to see that. But I short HP rejection? No, not in BSUs. No. These are all very bullish. One can always short off of HP. One can, but one must consider where you're shorting from and where you're shorting to. Jesus, you got to look at all the pieces. So one can do anything they want, and that's something that is a valid setup. However, there is no red line from here, so you have to make an argument. If you short from here, where does it go? Well, when you hit here, you have to analyze that, and that's certainly bullish, so that's going to support there probably. You need this to be negative for this to go lower and go to there. So it's a resilience play. You also have DD, which is bullish, which is going to support you there. So even the sell-off is a fight on the way down. Okay, does that make sense? Resilience is going to fight you here. DD is going to fight you there. Remember, there's no hedge break, so the DD rule is going to support us at bull zone, right? Yeah. So one may take a trade like that, as I can't advise you what to do or not to do, but know that a short from here is many hours of commitment, and you've got 2 resistances already on the way down, and you don't really have volatility kind of supporting you just yet. So these particular setups, the likely thing is that they're probably going to still try to push up and squeeze some bulls, and then like at the end of the day probably start selling again. If that does happen, that would be because of the volatility, but I don't take that bet. So that's a gamble bet. Betting on this bull market continuing to sell is a fool's bet. Not a good bet, and so I'm not making it. This is a bull market that doesn't have a good setup. Now, what I might do is I might want to take a long at the bull zone. That seems to be a little bit better. There seems to be more upward potential to there. This is the smarter trade, one may argue. However, we've already hit DD bands, so you're kind of already in that spot of, you know, it's kind of already in, like, this is the range that was important, and it's already kind of fulfilled most of it. So y'all see how, like, we can wake up, stare at the market, look at this, and just see that it's not really tradable. Does this make sense to everybody? We try to teach risk management first and foremost. That's why we're one of the biggest trading communities on the planet. We're growing bigger every day. These people are like, holy shit, we're learning risk management here. This guy wakes up and in 1 minute says, no thanks, he's gonna go watch movies all day. Already can determine this is untradeable from here. So I can set an alarm and maybe come check it out when it's down there. I can set an alarm maybe at 473 if it breaks, just to see. But then I don't want to trade outside of the DD bands. I would just throw a couple contracts in it anyways, and then where would I trade it to, right? So that's all. Not much to it. Does that make sense? That's it. We just want risk management is very important. So ideally, I would have loved to have caught this move, but this moved, you know, this off of the today's data. So again, analyzing that, GDP is looking great. We're getting that soft landing. I mean, it's initial jobless claims are still trending down, which is good over the quarter. Continuing jobless claims, there's still a lot of them, but they're not really getting worse. They've kind of flattened out. It's October. They're still trending up, which is kind of alarming, which means it's harder for people to find jobs right now. And it's, I don't know if it's companies being pickier, people want too high of a salary, or both, or job mismatches. The unemployed people might be in a certain industry and the jobs might be in another. You can't just get the job because they're not qualified for it. There's usually the 3 options. You get the disagreement between continuing jobless claims and the jobs. So it's likely a mix of all 3 of them. But it's not terrible. It's definitely not like amazingly awesome, but it's not terrible. It's just stable-ish. It doesn't show the market like the things getting worse. Like this going down is good. This being elevated is not the best, but it also is kind of like flattening out over the length of this. If you really think about it, like this was kind of shaped that way. That was kind of a little scary. And we were watching this, we're like, oh man, that's a problem. But then it's kind of like, you can easily see an inflection point, right? Where that second derivative is 0. You know, that concavity change right here. So in this particular setup, if you look at this, it's actually doing that. So it's stabilizing, at least for now. And if those initial layoffs continue to go down, ultimately these people will start to get jobs, and hopefully this curves around. And so this is kind of what we're hoping. Like this being here is since May, for almost the entirety of the year, is not terrible. This looked great as we went on a hiring spree when the market turned around after October. People started, you know, the market dipped and rallied, and then all this year people are getting hired. But now this is like, you know, problematic for the short term. Either way, 200,000 people. It's bad, but it's not like terrible, and it's kind of stabilizing, and it's been flat for like a month, at least relative to itself. So not too crazy. Philly Fed Index is horrible. Oh wait, let's go check that. Really? I didn't even look at that. I thought I opened that up. Oh yeah, Well, where was it at? There it is. Let's read into this one. So now, what's interesting or neat about these, number one, we have all these data points that come out. This is Philly. It could just be a Philly thing. There's a Chicago thing. Remember, there was a Chicago one as well, but there was like I think it was an automotive strike or something in Chicago that time. That really like shuffled those numbers around just for that particular. So you have to. I don't know much about what's going on in Philly, but just keep in mind that that is there like something going on specifically in that state. Like if there's a company with the headquarters there and everyone's on strike in that company, then these specific smaller surveys are going to actually reflect that number. So this came in an actual minus 10.5, and this is a survey. These what I call these survey readings. What they do is they send out the survey to like whatever the thing is. So this is manufacturing, right? So they're going to send to companies that participate in that industry, and they're going to ask them a bunch of questions. And it's usually like, how's your employment situation? How are your new orders? What's your back orders look like? Blah, blah, blah. And they basically just like at the eye doctor, they're like, better or worse? Better or worse? And you just answer questions like that. And so you basically, it's a binary subjective type thing. It's not actually looking at any specific numbers. Now maybe the person you survey may have numbers they look at. But in general, you're answering these questions like better or worse. And then the sum of better or worse plus you and everyone else surveyed creates it's a worse or it's better. So 0 being the baseline above that. Above 0 means the net sum of all participants voted better on all those conditions versus worse. Now that's relative to themselves. So, clearly Philly's still kind of like in a mess situation. It's hard to understand without understanding what's actually going on and the companies that are being surveyed there, right? So, but that was pretty horrible. Relative. It's been pretty negative for a little bit. So 250 manufacturers in the Philadelphia Federal Reserve District. So it's like you're getting spotty recession type behavior in certain areas, like Philly being a very highly populated area. It's one of the 10 biggest cities, I think. So it's definitely worth paying attention to. What do you think of what do I think of it? You want me to look it up? What I think of it is we're going to pull up a liquidity map and see what liquidity maps think of it. There's no monthly on this one. We're just missing. Okay. So, just like everything else, the S&P, look, it's bullish at 44. Pretty decent there. Let's look at monthly map. Bullish. Like it's just everything else. It's just bullish, right? So over the course of time, people are gonna be buying dips on this stuff. So I would wait. When I look at stocks that are matching the index, I wait for the index to be good to set up so I can actually find good dips to buy on the stocks. Just like everything else, it's projecting upward momentum still. Great question. We trade on into the bear zone and fill the gap card. Well, I mean, it's very possible, right? That if I were to take a guess, this is still going to try to push up and try to fight out, and you're just going to have VIX is going to be that deterring factor for upward momentum. So essentially, like You see how it moved very rapidly and it's tightening up. So like you can see that the market, this is your volatility, right? The wave, and then it bumped up and it's starting to tighten. So you see how it's starting to chunk a little bit. You're gonna need expansion up here, and that's what the VIX is gonna tell you. In this particular environment, that's what you get, right? It makes trading this hard. VIX is in a bull zone. At any time VIX can bounce off of something and hedge itself higher, it can create more volatility. So we don't normally consider the open and close, but we've been debating that the bull zone bottom here also applies at the open price or close price, because the VIX has responded there as well. So if one were to say that, then what it means is that you're going to expand your range as you go up. So like seeing green is not like, oh shit, let me chase this, I'm going to miss out. It's likely to dip on any kind of way up. You've got VIX above triple B and VIX trading higher. So so if you guys are like, why is this guy always talking about the VIX? And that's the easiest way to think about it as a trader. As VIX goes up, let's just do this. VIX, this is the easiest way to see it. As VIX goes up, your trade is going to have more wider moves. As VIX goes down, your trade is going to tighten up. So turn your head to the left, right, slanted, whatever. This is, if it's going up and VIX is going up, or VIX is elevated, you're going to get some dips to play with. So think of it like a volume knob on a stereo. And you're turning the volume up, the amplitudes go higher. You're turning the volume down, the amplitudes tighten up. Volatility is inversely proportional to liquidity. So liquidity meaning that you have like a big room of people, and you have like, you're playing dodgeball. You have a bunch of people crowded at the middle. There's some balls about to drop, right? This is very liquid. And as the game progresses, right, you're gonna have fewer and fewer people more spread out. So liquidity is everyone's congested in the middle, that they agree on the price, they agree where the balls are going to be, and then as the dodgeball game progresses, the balls are everywhere and people are thrown out of the game. So people are spread out and balls are everywhere. So the dodgeball is a great metaphor for liquidity turning to illiquidity or volatility. Volatility is a condition of illiquidity, because illiquidity means that the buyers and sellers are not crowded at the same price at the same time, same place. They are spread out at different places, different times. They disagree on price and disagree on when they want to buy and things like that. So because they're spread out, the bid ask is thicker, further away. So the market's more sensitive to small short-term action until it bumps into those buyers and sellers, because they're scattered. The more congested they are, the more resilient the market is to change. So because there are fewer buyers and sellers, a volatile market or an illiquid market, somebody sells 10 million shares, it can drop really quick because there's not a lot of buyers to buffer that selling. If there's very liquid 10 million shares, it may like bump into a whole bunch of buyers and then resist. So the same order has different effects based on volatility. So in general, you can say with all things being equal, when you turn up your stereo knob of volatility, markets tend to just get wider and choppier. So if you know VIX is going up and you see a green candle and you jump in on the green candle, congratulations, you're a newbie. If you see volatility going up, you see a green candle and you go, oh, you know what? I'm going to wait for a really large dip to go. Or you're like, hey, I was looking to short. There's my opportunity to short. It certainly is volatile, so there's a big V to short from. When volatility is going up, you wait and you find a dip to buy, or you find a high to short. You do not chase a candle, because that's what the volatility is. It will chop. Okay, do y'all understand that? Yes? Need some big old fat yeses in chat if y'all get this. If volatility is collapsing, you're going to miss out on the trade by not chasing. If volatility is going up, you know that you're going to get some opportunities, so be patient and wait for them. Knowing how volatility works is like the key, is one of the biggest keys to being a successful day trader. And so the reason why I'm even worried about taking, see, like right now, VIX is it's going up, but it's like relatively flat and somewhat decaying a little bit in the zone. So you can see how it's tightening up. Like trading is just kind of easily tightening up. Right? Because I know it's possible to have this move around and be more volatile, I'm going to be very patient on my trade. That's how it goes. So you need to get yourself situated. A brand new trader was predicting a crash today. So here's an easy long signal. Oh, that a new TikTok trader was born. They're born every 5 minutes, you know. They're streaming from gym class at the high school they're at. He's like he's standing outside by the by the parent pickup and his camera. Yo dog, I made $600 today. Hold on, mom, I'm filming. Honey, get in the car. Mom, you're messing up my TikTok. Honey, you're gonna be late for band practice. And she's trying to pick him up from school and filming a TikTok about being a big ballin' trader. Welcome, COVID era trading gears. Well, I'll be adding a red line, yellow line off. Oh, Kellogg, great idea. Let's do that while we're sitting here. What's not funny is how much they do make on YouTube and TikTok. They tend to make a pretty decent amount of money. You know, when I was their age, I had to work at a grocery store to make $5.15 an hour, and I would spend like $10 eating there on my break anyways. So it's like I worked for 4 hours, and half of it just went to fucking Lunchable and a chocolate milk. So, you know, that's that's what teenage life was like for me. In the 90s. You hustled grocery stores. That's right, baby. Robbie knows. I was a checker at a Kroger when I was 16. Making that good minimum wage. $5 an hour. Go buy an apple and, you know, something from the deli, and all of a sudden you already paid $10. But that's okay. I had a job. Okay, there's your. Oops. King Column's your jam, dude. Oh yeah. We didn't have those, but like I've seen them before. That's like, because you're in New York, right, Robbie? That's like upstate, right? Yeah. I used to go to New York a lot. I remember those. We don't get those in Texas. We're HEB. That's my gang affiliation. I'm Team HEB over here. All right, so the run length is gone and dead. So yeah, here you go, guys, and that's basically it. Good thought. So, right. So what you'll do is you'll just mark this up here. Pretty simple setup. Long Island. Yeah, that's where I saw them. Long Island. Long Island is nice in the fall, dude. Like when I went there, last time I went there was in the fall, and it was just like super pretty, man. All the trees were like turning orange and brown. We don't get that shit down here. You go outside one day in Texas, your trees are just dead. All the leaves are gone. Goes from green to brown and then back to green. We have 4 seasons here in Texas. We have spring, summer, hotter summer, winter for a month in March, and then it goes back to spring again. Sometimes it just goes straight back to summer. Summer plus hotter summer. Those are the 4 seasons in Texas. The trees, when it's like fall, trees go, nope. We're gonna hang in here until death. There's no gradual decline. We're gonna stay green until we're dead. All right, so there's the yellow line at the bottom. Very confident that we're not going to go there, but let's just mark it anyways. We'll leave it here in case it starts selling. I'm just going to be lazy on this one. Yeah, whatever. Let me not be lazy. I'm supposed to teach, so let's not teach laziness. Let's be real. Let's do it. Not being lazy. I just don't think we're going to keep trading down, but might as well. Let's mark it. Not all goes all the way down to there, right? So it's really far away. And we just keep them marked and keep them just in case. I'm pretty excited about automating this too, by the way. I really want, once we get our marketplace stuff launched and ready to go, I'm going to be excited about. There's your number. Having an automated process for this. Ooh. You're just thinking we're already past CD and volatility's moved to higher. If you don't find buyers to break hedge pressure. Yeah, and they could dip to find. See, you see how when I look at this, I go, there's no trade. And look what the market's doing. How many people out there probably trying to force a trade here, and you're just gambling, right? This is the power of rock scooter. That's what we do here. I know that this is just not a good setup. The long setup goes from here, but we're DD band breaks, so it's a small trade anyways if I do anything. Which I could throw a couple contracts at it, but let's go back tomorrow. Res is still decent, so you're gonna have support here, the DD band. So support here on res. So in reality, any upside movement is going to be hindered by volatility once VIX hits that. So upward movement with volatility shrinking, you're going to create some kind of choppiness up here. So whatever upside you get, we really don't have a target to go to. There's that 48.17 yellow line, which is way up there. Oh, there's my DD bands. That's so weird. All right, I just had to. Okay. So my yellow line is gone. Drawn here. To see how it works, it's like not a good setup. Now, would I short from here? I usually don't, just because these are very highly bullish setups. And let me tell you guys, this is the BSUs are very common. This is a very common play right here. Very common play. It's the halfway point between hedge pressure and the bull zone, which is literally here. This to this is going to be an ideal scalp. Yo, hey Mark, what's up, dude? My brother, it's been so long. I miss you, man. Oh wait, it's right here, look. Happy holidays to you, all of you, by the way. So everyone see this right here. This leg is very prominent. BSUs are very, 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 very bullish. Very bullish. They're bullish at all places. That's the thing about the second most bullish of all the setups. While you do have some hedging to the downside, clearly we've discussed all the supports pushing it to the upside here. So the bull zone support is going to be very strong with the DD at 99 and no hedge breaks to go with it. Like all these lights are green and yellow right now. I'm willing to long at 470, right back up to the halfway point and call it. Now from here, anything could happen. So this is the leg I'm going to aim for today. I might hit it pretty hard. It would basically be, so here's DD band. It would look a little bit like this. It would come to here and go straight to there. But I'm going to hit this leg today and call it. Does everybody see what I'm doing? Questions about what I'm doing? This is a very probable leg today. That's that setup here. There, and if you guys know, just if you're taking notes, the BSU bull zone supports are very strong as long as there's no hedge breaks. And it's a mouthful to say, but that's the truth. Whew, yeah. All right. So those of you just getting into learning about Rocket Scooter and joining our program, are y'all liking what you're seeing? Are you guys liking the idea that you're not just chasing technicals, you're not using the same momentum-based strategy you used before, you're using logic and patience is the key to this, right? Like here, I'm identifying a trade that makes a lot of sense. I'm gonna get this leg and nothing else. I'm not trying to chase a move. I'm trying to play the imbalance game. There's enough bull support that it's gonna likely try to support through here. You had a bunch of reasons for it to support. Half gap support, bull zone support, but we're below hedge pressure, so it's gonna fight a little bit. Amaret DD band, it's gonna be a little irrational and choppy. So I'm betting on this leg here. A breakout here, sure, would be worth taking, but then these lights go red again, and so I'm back to trading small. And then, of course, you're outside of DD, so your target would be here anyways. One may decide to take that 30-point run, but then again, I don't like trading outside the bands because it's irrational. And the idea that because it's going up, that's going to go down, you're going to hit that bull zone thing, and it can be one of those days where it just does this again. Like, that volatility can just pop up out of nowhere and kick you in the face. So then I'm like, all right, so I'm limited in trading here. I don't even want to throw something into it because I'm going to have to watch it all day. Because if it starts collapsing out again, then I'm dead in the water. So that leg's not worth taking because of that. All right, sit out. This leg is really strong because all of these lights will be yellow and green. So I'm looking like a couple steps ahead. Bull zone support is a very solid trade. Yeah, Fosso knows. You've been here long enough. Same trend right now, bounce of a half gap. Yeah, 100%. You get it. So I'm just think about it. It's like, okay, I'm going to be patient. Just wait this one out. And it does make sense because this is trying to support here anyways. And so, you know, that does line up with that pretty easily. Right. Okay, so we had our first final... I say first. We had our first site walkthrough on all sides from the admin perspective, from the vendor admin perspective, vendor perspective, and customer perspective of the brand new Rocket Scooter Marketplace. Imagine Amazon for traders, and that's what we've built. We've been building it all year in secret. We've been talking about it. Probably in the last 3 months, we've been hinting and talking about it. We're about to start marketing it. We have 50-something vendors already interested. And we stopped asking people because everyone said yes. And we go, okay, well, let's build the damn thing first. All of our friends, all of our favorite people out there, our favorite communities, favorite trade rooms, favorite product makers, everybody that's good with something good to sell. We're going to have it all in one place, integrated with our platform, all the bots we've made, et cetera, et cetera. We built some unique custom bots that do everything from alerts to you name it. Again, we're very secretive about what we've made. But yesterday we went through what we're calling our alpha launch. It's going to be one test vendor, and we went through everything, every single part of this. From our search engine algorithm that we built to the SEO, all kind of stuff. See, experience flow, UX flow, the typical things. And so we're really excited to do this. So imagine vendors making indicators, putting them on our platform, or vendors having alerts or scanner settings or whatever, and they can also bundle those up. You have your favorite trader out there who has their alert setups. You can customize your own alerts in this platform. So you can add like different things to the platform. We're done. I'm very excited about this. The reasoning, you know, that was always the goal many years ago, to build a marketplace. We're creating our own scripting language called Rocket Script. It's going to be part of the suite. So you guys will, once we release Rocket Script server side, we're going to have a front end version of it. We'll be able to create your own indicators for this platform now. as users. But yeah, our coding language is called RocketScript. That should be done about RocketScript should be done about February, March. So imagine end of quarter one, early quarter two, you'll be able to write your own stuff in the platform. I know y'all been very eager about having that opportunity to do that. So I'm happy to announce. Are y'all excited? I'm excited. But now you'll have your own, like in TradingView has PineScript, we'll have something similar. You have an input console to deploy your own tools, and also export them and share them with your friends and list them on the marketplace and things like that. But we take it many steps further than like TradingView does, because we have customizable widgets, and your outputs don't just limit yourself to the chart. And again, I can't announce all the different things that are going to set us apart from everyone, but we're going to be definitely build some things that people haven't built yet. Oh, there's a 4770 yellow line is also right here. Hold on. Loan. So keep in mind, like this is another support. So everything's kind of like lining up right here. I do like it. So 4770 gives me about like 7 more points a dip. That yellow line hopefully can support. So this is, let me clear off the screen. Make sure I save my drawing. 4770 on the dot. Okay. Now again, this is a risky-ish play, but let's catch this. It's pretty well defined. You have about 14 points right here. I'll take about a 5-point stop to do that. I'll force it to be a 3-to-1 trade. I'll just do 5, so about 65 I'll close. It's gonna be 5 points of loss and maybe 15 points of gain. Let's get that down. I move. How's resilience looking? Resilience is still positive. We're still looking good. I'm looking from here to here. That's about 15 points of move. So I'm going to be patient. Remember, I'm going to be patient. I'm going to I need that risk to reward. I'm not going to jump in early. Ooh, ooh, ooh. Come on, baby. Hit that bull zone. I'm gonna be picky. Relax, don't do it when you wanna go through it. Don't chase those greens. Patience is a virtue, young grasshopper. This is only 10 points, not worth it. Index divergence, be careful. Nasdaq is starting to diverge really heavily. That's what's pulling the S&P down. Let me double check that QQQ is not threatening like a break or something. You know what, guys? I don't know now. Now my confidence is even kind of meh. QQ already hit a liquidity pocket. You're random and over from here, so I don't know. I like it. Been busy with work, bro? Oh yeah, man. Walgreens, CG. Around the fence, always good to walk away. You lost many e-bows in the past, let me come in. Yeah, 100%. See, even right now, like this goes here, Nasdaq is here. Nasdaq resilience is negative. It's like, can that pull down even lower? These lights are still, this is a caution, but we'll see. Is the scalp worth it? Again, Nasdaq is just cautioning me. It doesn't control the S&P. The S&P is likely to yank the Nasdaq back up. Okay, so remember, I'm not gonna be tricked on this one. Let's see a red candle come over here. Let's just see it do that. So there's the liquidity pocket in the NASDAQ that's creating that liquid spot in the S&P. It's just algorithms right now. Right, we know that you hit this liquid spot. There's going to be some buyers in here. All the way. It's too bad. What do we got going on today in the world? Patience. Always be patient. Know your trade and be patient for it. How we doing? Oh, still hanging in there. The DD numbers change every day. They change in real time. It's just that way because that's what the market is. Look, if you zoom in, you can see, look. It's just rounding to the nearest 2 decimal points, but like the DD numbers change in real time. You see this? 98, 99, 98, 99. They move in real time. It just rounds to the nearest decimal on the display, but it's modifying itself. Oh, okay. So this is gonna count as that leg I want. So I'm gonna call it a day. Since this already kind of took off, a little irrational behavior from this, and I didn't get the trade I want, so I'm gonna call it. I'm done. Day's over. So you guys have a wonderful morning. The DD input. Okay, wait. Let me start over. The DD numbers change every day. These. Yes, they change every day. Sorry, they update every day. They only change when the CME group changes the minimum, the performance bond minimum, or the initial margin requirement minimums for clearing firms. So essentially, when the margin requirements change, these numbers will change. Not, some of them change every day. Some of them change 1 or 2 times a year. Like the S&P and the indices, they'll change a couple times a year. Those margin requirements don't change much. Can I soften the music? You mean like change the music to something a little softer, or just lower the volume? My bad. Above BBB. And oh yeah, Alan nailed it. Above BB, sloppy pivots as well. Again, you guys are seeing all of our things together. Right. You're not getting a really good solid pivot. It shoots early and jumps early. So that's that above triple B thing that we talk about in VIX as well. So this is going to kind of disqualify that little leg that I wanted to trade on. Let me show you what he's talking about. Alan, good job. Even I didn't think of that. Let me show you what he's talking about. So all of our tools here are very descriptive of what they do. So in the new VIX contract for the month, right, we're in contango, we have a new triple B, we're trading above it. So this regime is a little harder to trade than this regime. This regime is super easy compared to that regime. So what happens when VIX is in contango and it has not traded out to fall below that triple B level? This is it right here. There are loose pivots and overshoots. If it's less than triple B, there's razor sharp. So loose pivots and overshoot. You see how when I say loose pivots, it just means that it may not hit the level you want, or it may overshoot the level you want. So that's this effect right here. And then of course it's not hitting DD band as well. See how it's a loose pivot? It's sporadic and choppy. So this is essentially the leg I wanted to get, give or take, minus a few ticks. So I missed out on it. You see how I wanted to take it though, right? Mic is off. My bad. So Sean, I didn't trade it, by the way. I don't let the candles bunching up dictate when I make my trade. I need to trade off of something to something else. When you hit the middle, it's random. The coin flipped up as opposed to down. I didn't trade it because once it hits random, it's kind of random. We pivoted early because of the loose pivots thing, and also because the NASDAQ flipped the coin and went up. So had I longed right here, if the coin flipped down, I would have actually fallen there and taken a stop. My loss would have been really big for just a little bit of reward I wanted to take. So I got a couple steps ahead of that. You know, think like a chess player. Jumping in early, the risk on the coin flip going the other way would have been a much bigger loss than the gain I would have taken. So I need to get the pivot I want to get the trade I want. That's it. Well, we do know that support and that support. I really want to get in there because I'm trying to scalp up on that particular leg. And that is a bull zone bounce leg. And that's only one I take. Does that make sense, everybody? We good? Y'all follow what I'm saying? Check, check. Can you hear me? Check, 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 check. Okay. This is a toss up. Losing bull zone can do either thing, and we have no statistics on how to play that, right? It's perceived to be a random spot from there. So because I didn't get this, I just missed out. But see how that's the leg I wanted to take. Clearly, I was talking about it. It pivoted early, so missing out on it. And then of course this is that resistance area. Is the pivot thing as a risk man? Well, yeah, because there's not. The risk and reward has to be there, right? So let's just map it out. Resilience from there to there. There is from there to there on leg 2. This is res. This is res. The bull zone to half distance. This is liquidity map on BSU. So there is support all through here. There's a lot of support right there. So I don't want to trade here to there, which is that liquidity map area, because that's basically that leg. So while it did pivot early, it made more sense to get a better entry, because when this was here, this is a coin flip, and this very well could have dipped and nuked itself also. So because my stop would have been right there for just such a small little gain, it didn't make sense with the small reward to big risk. I didn't take it. Now this, again, if one were lucky and did dive in there, there's your trade. You got it. That's it. I just said when it got there, it's like, I'm going to be picky and I'm going to hit that yellow line and make sure I'm in. But when somebody said today, are you shorting this? And I said, hell no. Whoever said that, now you see why, right? Whoever said, are you going to short this? And he said, you can short off a hedge pressure, but I usually don't, not in the BSU sitting, because it's the second most bullish of all the liquidity maps. From all places, it's bullish. Above hedge pressure, it's bullish. Between the hedge pressures, it's bullish. Below the hedge pressures, it's bullish. So it's like, even that setup in all places has upward momentum. I never short BSUs or bear long downs. Same setup. I don't long the bear long downs either. The reasoning for that is the hedging structures are so strong. So it's the one that has the leg to the middle, like the bear long downs. I don't long anywhere. I don't buy hedge pressure bounces on any of these. Like there's so much downward potential. There's so much upward potential at all places. It tends to do shit like this. So that's one of my favorite ones to trade, because it's very obvious that you're either long or you're sitting out. There's no short setups. Never short in a bull zone. Omar also kind of pretty much sums that up as well. It's very rarely would you ever pull a short when the market's sustainably bullish. Like in here, you may want to take a scalp short off of monthly hedge on this one, maybe. But all the other ones, and well, the BSD, the inverted illiquid ones, you would play the opposite. This is probably the only one that you would short. I never take that leg that often unless I'm very convinced it's a bear market. I usually in this sitting, I usually long to there and call it. This one is always a short. So shorting off of hedge pressures in the BSD is the only time I short in a bull zone. And then of course this one as well. And that's just because you have all of that hedging pushing down. You've got bull support really far away. So it just usually shorting off hedge. But yeah, very rarely would you short in a bull zone in general. Yeah. The system is really involved. I was just walking the door when the bounce loose pivot started. Yeah. So this was the leg I would have taken, but it pivoted early. So, but you see, we mapped it out pretty good. I just didn't take it. All right, I'm calling it. Love you guys. Feel free to head over to the website. Give us some love over there at rockzero.com. Marketplace come out very soon, at least an alpha stage, and beta's coming after that. We're gonna have a lot of cool tools and things for you. The evolution of the platform in 2024 is gonna be massive with all the features we're bringing out. AI assist, role assist. I mean, it's gonna be pretty cool. We love y'all. Thanks for supporting our group and the growth we have here. 3 new videos will be published to the website today on random rules, and we'll link them in the Discord as well. Thanks for tuning in. Remember, we have our extended trial, $79 a month for 3 months on the $200 Pro Plus. So it's a pretty decent deal. Just check it out, see if you like it. Try it before you buy it. You know, the platform, we love you to support the community, support the team, support the development team. Here's to one hell of a good 2024. Y'all made 2023 awesome. Let's continue this momentum. Have a good holiday, and we'll see y'all later.